Thank you very much, Mr. Bornozis. I'm delighted to be back in New York. Thank you to Capital Link for organizing this event and inviting me. Thank you to all the sponsors for supporting this event, and thank you all for attending. Now, Michael has effectively made all the points regarding the Cyprus economy, but let me try to repeat maybe a few of these points, offering you a brief overview of the current state and the prospects of the Cyprus economy, hopefully setting the scene for the panel discussions which will follow. But before anything else, let me tell you that I don't really like numbers. I know the perception is that all finance ministers are number crunchers, but I'm actually not very good with the numbers. But I have to admit that sometimes numbers do tell the story. So take note of this set of numbers. From 2009 to 2014, the Cyprus economy lost an aggregate 10.5% of its GDP. This was a very deep recession, which saw unemployment touching 17%, which brought the banking sector to its knees, and which raised doubts about the ability of Cyprus to remain a member of the Eurozone. So this was the situation until a few years back. By the end of this year, though, and after 4 successive years of recovery, the Cyprus economy will have grown by 16% of the GDP. We have more than covered the lost ground, and we expect growth to remain above 3% annually for the next 3 years. These rates make Cyprus one of the fastest growing economies in the EU. Unemployment is already down to approximately 7%, again registering the fastest drop in the EU, and we aim and expect that conditions of full employment will be achieved by 2020, if not sooner. So a very painful fall was followed by a strong recovery. So how did this happen? One could ask. Did we spend our way out of the recession? Did we flush the market with excess liquidity to get the economy moving again? The answer is not at all, and the numbers continue to tell a different story. Up until 2013, Cyprus was registering budget deficits in the range of 5-6% of the GDP annually. But since 2014, we are operating with a balanced budget. In fact, for the last 3 years, we're operating with a surplus budget, currently estimated at 3% of the GDP. And this is what we are budgeting also for next year, 2019. And once again, this is a top fiscal performance amongst the Eurozone economies. And I have to say, we do need this solid fiscal performance to be maintained, because the public debt is admittedly high, still high at 104% of the GDP, and the plan is to bring it down to 90% by 2020. So no, we did not spend our way out of recession, because this would not have been a sustainable recovery. This was not what the market forces were expecting from us, and this was not the missing element from the Cyprus economy. What was missing was confidence. The problem of the Cyprus economy was not so much on the supply side. It was on the demand side. So we had to restore confidence and stimulate demand. But we knew that this would not be achieved, at least not sustainably, through the recipe of tax and spend, nor by maintaining government spending in a deficit position. Instead, we balanced the budget fast, and this allowed us to safeguard tax certainty, to promote tax breaks and other incentives for private enterprise and investment, to restore consumer and business confidence, and in this way to get the economy moving again. And this is exactly, ladies and gentlemen, this is exactly what any government should do. Governments should create conditions of stability and confidence. They should create a business-friendly economic environment, allowing the productive forces of the economy, allowing the private sector essentially to do the job. And this is exactly what makes economic recovery sustainable. And indeed, all the key productive sectors of the Cyprus economy are performing well, including tourism, shipping, real estate, and business services. The productive base of the economy of Cyprus is gradually expanding into new sectors, including higher education, innovation, offshore natural gas, renewable energy, investment fund management. Of course, we know, and this is something which I openly admit, I acknowledge, there is a potential to lift the Cyprus economy even higher. So we should do more in terms of reform. We should invest more in technology. We should continue to promote incentives and stimulus for new business. And I can assure you that this is exactly the plan of our recently re-elected government. For instance, we shall be reforming the judiciary. We shall be investing heavily in e-government. We're drafting a policy to further support both private and public sector universities, also to support centers of excellence for research and innovation. We have also embarked on an effort to draft a national strategy regarding blockchain technologies. We're even launching an initiative working closely with Invest Cyprus once again, an initiative to encourage the development of the filming industry with grants and tax breaks, which obviously complement the natural advantages that Cyprus has to offer. So, ladies and gentlemen, as Michael has mentioned, and since 10 days ago, Cyprus is back in investment grade zone thanks to an upgrade from S&P. And last week, we tapped the markets, raising 1.5 billion, a 10-year bond, with the lowest yield ever achieved by Cyprus at 2.4. So the Cyprus economy has already entered a new promising phase. Before I conclude, let me also briefly refer to the Cyprus financial sector and especially to the banking sector. And here I would say that the banking sector continues to command a central position. The unsustainable expansion of the sector was at the heart of the problems we faced a few years back. credit, take note of another number, credit had expanded by more than 3.5 times over a 10-year period, leaving behind a sizable stock of non-performing exposures. But since then, progress has been steady, and I know you will hear more from a panel of bankers in a short while ago. In fact, progress lately has been decisive and fast as a result of a number of actions taken, including the strengthening of the legal framework on foreclosures and insolvency, and most notably, the carving out of almost half of the non-performing exposures from the banking sector. None of these decisions were easy politically, but they all worked to the benefit of our economy. The banking sector also operates under a much stricter set of rules and regulations. AML and KYC procedures have been shored up, and any reputational issues belong to the past. In fact, here I would make a very simple argument, actually a challenge. I would challenge anyone, any non-Cypriot, to try, just try, to open a bank account in Cyprus and to compare the strictness of the process with that of any other jurisdiction. I should also note the very positive and very important presence of new investors, particularly from the US, in the banking sector of Cyprus. Obviously, a full cleanup of the balance sheets of the Cyprus banks can only happen gradually. But it is encouraging that new credit is picking up, and this is of a much improved quality. In the meantime, the real economy is advancing with a strong, steady pace. Asset prices are rising, investment and consumption is on the rise, and the government remains committed to maintain fiscal discipline, but also to continue promoting an ambitious reform agenda in order to continuously enhance the competitiveness and the growth potential of our economy. And it goes without saying that within such a framework, further expanding US-Cyprus economic relations is a top priority. And hopefully, one which we shall be able to commonly pursue under conditions of free and fair trade and open markets. Ladies and gentlemen, thank you for your attention.